What's up, boys and girls? Welcome back to another video. I want to show you how I took this strategy right here from a 63% win rate, $42,500 in profit, 194 total trades, to this strategy, 85 total trades, 60 of them ran for 15% with a 71% win rate with almost the same amount of fucking net profit. Ain't that crazy? You take 194 trades just to make 42,500, when in reality, you could have taken 85 trades and made the same amount almost. You lose out on 2,500, but you take way lower. You cut the amount of trades in half, and on top of that, you're trading for less time. And the only way I was able to fix this, guys, is because of all of this information and data that I track. So let's have a real conversation, because I know you guys want to be more profitable in 2026. So like, what's the best advice that I can give you guys that has truly helped me out in 2025 going into this year that I think is going to continue to help me? And it's my fucking obsession that I have with having more data and more information than anybody else in this game. And when I started thinking about it, I was like, this is the best analogy that I can give everybody on YouTube. I want you to envision this as a ladder. It's an ugly ass ladder, but it's a ladder. And the higher you go up on this ladder, the more money that you make in the market. Well, we need to ask ourselves, who the fuck is at the top of this ladder? Who's making the most amount of money? And we all know who's making the most amount of money. It's the hedgies, baby. It's the big hedge funds. They manage billions of dollars every single year, and somehow they get a return month over month, and they get a return year over year. Well, how the fuck do they do that? Because 90% of retail traders are unprofitable and they're losing money. So what the hell do these hedge funds have that we don't? And I'll give you that answer. It's right here, baby. They have access to more data and more information. And you listen, you can sit here and say, Andrew, it's market manipulation. And sure, what the fuck ever. It could be market manipulation. Who knows what goes on behind the scenes? But I know for a fact, something that's productive is like, okay, they do have access to more data and more information than me. So I know that plays a part because they're able to make logical decisions. They're able to build out algorithms based off that data instead of making emotional decisions. Okay, let's go down to the next level right here. Let's talk about like who else is making a lot of money inside of this market. Okay, next up we got institutional investors. Why the fuck are institutional investors getting in early? You want to know why? Because they have access to more data and they have access to more information. Okay, let's move down a little bit lower on this ladder. And who's all the way down here at the bottom? Raise your hand. It's me, you, Billy, Joe, and Bob. And all of us are down here at the bottom as retail traders. I'll just put RT. Now, the problem with this, Billy, Bob, and Joe that are watching this, is that there's levels to this retail trader shit, right? Because you're competing, player versus player. You're competing against the hedge funds, the institutional investors, but also you're competing against other retail traders, which means you're competing against people like me who have tracked every single one of their setups. They compare the best take profits. They compare the best place to put their stop losses, and they're constantly making adjustments to their strategy based off that information. I'm trading with more logical reasoning than just trading with emotions. And then all the way down here at the bottom, you know what you got down here at the bottom? Billy, Joe, and Bob. And you know what they're doing? Oh, it's a green candle. I'm just going to buy now. They don't really have a strategy. They have a half-assed strategy. They jump from strategy to strategy. They're always making emotional decisions. They make money one day and they lose it back the next day. And they never follow a strategy long enough to actually see it through. They don't track anything. They don't have access to any data, any information. And they don't track anything because they say, it's not for me. I'm just going to shoot from the hip. Pachoom, pachoom. And then they lose money and they wonder why they're losing money because they don't have access to enough fucking data. That's what I'm trying to get across to you guys to become a better trader in 2026. And comment down below and let me know if you agree with me. I believe the answer to that is having the most amount of data as possible. And the proof is in the pudding. The way I was able to make adjustments to this strategy is because I had all of the data. Up here, I track over 15 different variables: time of day, free flow, market cap, day of the week. Did the second 5-minute candle close green? Did the next 1-minute candle close green? Was the 1-minute candle trending green during breakout? What was the dip before the breakout? What was the daily gain at the breakout level? I track all these things. What fucking country did the stock come from? So what I was able to do is once this strategy started chopping sideways, I said, let me revisit all these different variables. And is there any time frame that's currently not performing very well? Is there any free float that's currently not performing very well? What about the market caps? And out of all these other variables, is there anything else that I can add on top of this where we can filter through and limit the amount of trades that we take but still get the same result? And through that filtering, I was able to turn it into this. This is the same exact strategy with the same exact trigger with just a couple more filters. Basically what I had to do was I had to cut out 2 hours out of the day that was not performing very well at all. So this strategy was performing phenomenal during certain times of the day. But the other 2 hours that I was continuing to trade, just going into 2026, they're not performing, and it's actually what's holding the strategy back. And then I started visiting all my other different variables as well. And I was like, what makes the biggest difference here? And then I noticed one of the other variables, like, man, it impacted the strategy a lot. And if I just get rid of that one part, then actually, in this strategy, instead of pulling back for all of December and January, holy shit, I could have just kept growing, right? So right here, I'm growing through August, I'm growing through September, October, I'm growing through November, December, January. And then right here for the past month, from January 15th to February 15th, it's kind of started to chop a little bit and go sideways. It's not necessarily losing gain, but it's not necessarily making big gains neither. At the end of the day, that's fine. I know that there is going to be some drawdown here, but this is a lot more enjoyable than having to hold through this, which is basically 2.5 months of drawdown, right? And the only reason I'm able to make adjustments like this on the fly is because I track every single one of these setups every single day. And let me give you another example of why this strategy is 10 times better if you trade in a cash account. Right here, bottom right here, if you see this number right here, this is the max amount of trades that you would have taken in one day using this strategy. This is a very key number. The most amount of trades that you would have taken in one day is 3 trades. The most amount of trades that you would have taken on this strategy is 5 trades. This is so important if you're in a cash account because you do not have unlimited trades. Let's say, for example, you got 20K in your account, right? Then what happens is if you take a trade with 10K, right, then all that you have left available to trade with is an additional 10K, right? Which means what? You only got 2 trades for the day. So what do we need to do in order to make this work? Because obviously you want results like this. You want to make, comment down below. If you made $40,000 over the past 6 months in your trading portfolio, would you be happy? Yes or no? Comment down below. All right. Now, what do you need in order to pull that off? Well, you need to be able to go into a position size of 10,000, which means how much do you need to have in your portfolio if you got super aggressive? Well, to make this work, the most amount of trades that you would have taken in one single day is 3. And actually, there was only one day out of the year where you would have traded 3 times. Every single other day is 2 and less than 2, which means 1. So the max amount of trades that you would have taken in one single day is 3. So if you wanted to get super aggressive, you could get away with having 20K in your portfolio, right? And then from there, you're going in with 10K position sizes inside of that. Now, that's super aggressive, I will admit. So what's more reasonable is actually, like if you're going to go in with a 10K position size, your portfolio probably needs to be at 30K. That way you have 3. And that's actually 33% of your portfolio that you're going in with every single trade, which is a little bit more dangerous, which means you're risking a lot more. But the reason why it's profitable still is because this setup absolutely fucking prints and wins 71% of the time, right? Now, honestly, if you wanted to get a lot more conservative and just be more on the conservative end, if you were trading with like a 50K portfolio, right, then you're going in with a 10K position and you're going in with only 20% of your portfolio. That's going to be, a lot more reasonable. But for some of you, you guys want to get aggressive. So I'm going to give you the aggressive options. So what do you need in order to make this happen? If you want to take this strategy and actually make $40,000, how much do you need to have in your portfolio? So I'm going to start off with the most conservative. Most conservative, you need 50K. You got 50K in your portfolio. You can easily go in with 2 to 3 trades of 10K per day. You're not even going to be using all of your portfolio in a single day, right? If you wanted to get a bit more aggressive, I'd say 30K, right? Because then you have 3 trades. You're going in with 33% of your portfolio. This is still super aggressive, right? Like this is you risking a good bit here on every single trade. And if you wanted to get super aggressive, technically you could make it happen with 20K. Now, this is super aggressive. That means you're going into positions with 50% of your portfolio with a 10K position size, right? But that is what would be required if you wanted to get that growth. And technically, you could have made this work. You could have had 20K in your portfolio, went in with 10K position, except for that one day in October 23rd, you would not have been able to take all 3 of those trades. So you would have missed out on one of them. Maybe you missed out on a loser. Maybe you missed out on a winner. Your net profit would be a little bit lower than that. But every other single day, you would have been just fine. So this is how I use access to information and data in my dashboard to not only take a look at strategies and find the strategies that are actually profitable, but actually take those profitable strategies and make them even better using information and data.